Welcome to my YouTube channel. Once again, it's your boy Only One by FX, and please, if you are seeing this channel for the very first time, please don't forget to like and subscribe. Okay, thank you for that. And then remember, I'll keep you guys updated in terms of posting videos and useful content, or that will help you guys to navigate, or help both of us to navigate the world of trading. So I want to explain these buys here. This buy that I took here. So I'll be cleaning all this chart and this second one actually. So first of all, if I come to my chart, what I pay attention is to know the buyers. Like, okay, first of all, I want to know who is in control of the market at that very moment, because I trade the now. All right, I focus on the now. I don't go to previous chart of the past week. No, no, I just come to the market. I just pay attention to the current market price. So that very day when I came to the market, I noticed price break above this point like this, made these highs. All right, made this high. So basically, where was the low that made this high? This was the low that made this high. This low, because this low that made this high. And there's something you need to understand. There are sometimes market will expand in terms of structure, and there are sometimes market will, the structures will be very, very compressed, tiny, not that large. All right. So now when I came to the market, I noticed price did this high and then tapping this low. Then I noticed market has been giving us, if you pay attention, after tapping this low, first of all, it did not break this low that made this high. This low here. There was no break to the downside. You can see there was no break. So basically, that's actually telling me that means the buyers are still what? In control. The buyers are still what? In control. All right? The buyers are still in control. So basically, since the buyers are still in control because they printed a higher high, which is an indication, then this is correction phase, and then this is what? The continuation phase or the impulsive phase. So after price slow down and get to this low, then immediately I noticed price started printing a high. You can see breaking highs, breaking highs. All right, then leaving higher low, higher low. So before the market get to this high, the market actually gave me something that made me believe that there is a tendency that this market will buy. Remember, this is probability. I am basically paying attention to what is going on the chart. You understand? First of all, you need to be present enough or aware enough to observe the market and know that yes, this is what this market is doing, is actually doing this. You have to see it for what it is. So pay attention to this market. After price tap this higher low, did not break it, internal structure started making higher highs, higher low, higher highs, higher low, higher high. I said, wow. And all these higher high, higher low, I have not seen my edge, like my entry. There was no entry here. Okay. I waited. So after this higher high made this last higher high, remember, this was just internal structure. This is the main structure. After this higher high made, then price came down, sweeping this higher low here. You see, it swept the higher low. Now, like a liquidity sweep taken, bam. That means it's telling me that okay, for the price to sweep this low, that means it's tendency for this buys to continue to break above this high. But unfortunately, after price pushed up, it rejected. But I'm still looking for buys until what? Price breaks this low internal structure. But remember, if you are trading this internal structure, you are still targeting this low. The market is still what? Purely bullish. The market is still purely bullish. Why? Because of what? We have a higher low here that made this higher high. This is basically a higher low. It's trying to make another higher high, which you don't know, right? But basically, the buyers are in control. So you notice sweep like this. I said, okay, that means the market is ready to buy. But after market, still I have not gotten my edge. Then the market did what? Tap these highs. After tapping this high, then this pullback. That was when I paid attention to what was going on 15-minute chart. Because of what? Obviously, for the fact this the external structure is bullish and then the internal structure is also still bullish, man, that is a very, very higher probability trade once you see your buy edge. Now, I am looking for my edge to align with the market clue. You see what I'm doing? I am trying to wait for my edge to form for buys so that it will align to what the market is doing. This is basically a framework you have, or should I say, a particular logic you have that anytime this thing appears is for buys. But before you use it for buys, is the market actually indicating buy? Is the market clue actually telling you that yes, I am ready to buy? Is the market clue telling you that buyers are in control? For that buy edge to appear, then you take the trade because of what is in line. It has aligned with the market truth. Are you guys following me? So now, basically, after this market made this high to this particular top, touching these highs, to me, I'd be like, I am still looking for buys. Because initially, some people feel like, okay, since it has touched this high and rejected, there's a tendency for the market to drop down. But immediately I see this sweep here, I said, no, possibility. But regardless, I am still thinking two-sided because a probability is not meant to be, you're not supposed to be thinking one side. If something is probability, you shouldn't be thinking one side. Please pay attention to that. Something is probability. You shouldn't be thinking one side. Okay? So, and again, I want to say something. In terms of those people that have a strategy or edge in the market, that each time your edge appeared, what you should think is what this is basically an opportunity, not a guarantee. An opportunity for anything to happen. An opportunity for something to come in your favor, not a guarantee. Since it's an opportunity, you should do what? Treat it as an opportunity. Basically, it's okay. Let me throw this amount of money to this for the fact I saw this, I saw that, I saw the market clue for buys, and the market clue is, and then my edge appeared for buys in line with the market clue. Let me just do what? Throw this, flip this coin and see if there's a tendency. But this money I'm putting, I'm willing to risk it because it's not guarantee, it's probability. That is the mindset right there. So let's be going. So basically, after this market pushed to this high, dropped a little bit. First of all, as it's rejected from here, I want to still see buy continuation. You see this bear bar rejected. I started seeing something like consolidation, which made me go to 15-minute chart. I be 15-minute chart or 5 minutes. It was 15-minute chart. So now this was the rejection on 1 hour that happened. So I noticed what happened. After this rejection happened, you see buyers pick up from here. What do you notice? This rejection couldn't come to this low again. You need to be paying attention to this chart. Like this thing is literally telling you everything. Now this was a lower low. Yes, this was a lower low. This low. But after this market pushed to this point, it rejected. This low couldn't get to this one again. It started pushing. Now this was a general resistance that was holding this market. Sellers here. Immediately I noticed that sellers are here pushing price, but the lows kept on. Price has not been coming to this initial low, also to this low. I then wait. Immediately, what happened? This candle break above this seller here. Immediately, this candle just break above this seller. That was why I got my entry. That was why I got my entry here. And the stop loss was below here, about 90 pips. You can see, like, I paid attention to the charts. I was present. I was reading the market for what it is, not for what I'm thinking, not for past price issue, for past price action. No, this is what is being displayed in the now. You understand me? You will literally learn a lot. Like I don't know, but I believe if you can pay attention to my videos and watch my videos over and over again, implement this thing, backtest this thing, you will come back with your testimony. All right. The only problem you're having is yourself managing risk and trying to be disciplined in order to wait for the market to show its hands. That is the problem. That's what I'm saying. That technical analysis to me is not even 10%. It is 5%. Overcoming yourself in trading is one of the biggest battle You need to fight. Now, I told you guys, it's a very simple logic. Structures. One of the easiest strategy to trade. You need to just pay attention to the market. The market is the real edge. Check all my videos. I've been saying these things, that the market is the real edge. You don't need to complicate these things. You need to just pay attention to what is going on. Observe, look, then leap. Remember, this market will not present opportunity every day. Now, only the disciplined ones who wait, they are the ones who get the bread from this market. For the fact you have a strategy, you understand how to read the market clue, and you have a logic for entry, for buys and sells. Discipline. If you can overcome yourself, you've won. And then have capital, you've won the game. Seriously. So that is how I call this beautiful 400 pips on gold. A very clean trade. Very, very clean. Like, you don't need to complicate the price action right here. You don't need to complicate the price action at all. This was how I got the trade. It's basically paying attention to what is going on. You need to relax. Observe. Observe. If you can observe, you will go far in trading. Guys, so that is how I call this beautiful trade. I hope you guys understand my explanation. Please, this video will be a little bit longer. And so I think that's all for now.
Yo, I want to just give you guys a short breakdown of how I caught this trade yesterday. Yesterday I caught almost 400 pips, roughly 400 pips, and also now 300 pips. I think it's about 300 pips. And the way I took this trade was intuitive trading. It was a very, very nice and easy pizza trading. You know, the market has been pushing highs and it has not given us a clear of a good high, right? Because for you to understand that market has given a high, it should be giving us a pullback in bearish momentum, lower highs, lower low. All right. So I noticed market made this point that I marked out yesterday. I strolled to 15-minute chart. The way I entered this trade was intuitive trading for real. So I went to 15-minute chart. I noticed that from here, after price made this high, this little high, then it made this low. All right. After making this low, it made what? This high. This high came to tap this point, telling me that, okay, this was a high, this was a low, and this was a high, and this was a low. Because after this highest point, price made this lowest point, then made this higher high. All right. So after my price made this higher high, it pulled back, swept this low. After sweeping this low, it made this push. After sweeping this low, it made this push to this point. So right after making this push to this point, it pulled back. This bear now couldn't get to this point. Immediately I noticed that price couldn't get to this point, and then immediately this bull candle formed. I said basically that means this higher low, this particular move that swept this low means that this market is no more coming here, and that was why I entered. You can see before the trade on 1 hour. This was before the trade on 1 hour. You can see that, and then this was the trade. A very, very clean move. I don't know, trading doesn't need complication. You just have to pay attention to what is going on. The chart is the real edge. I hope somebody out there understand this explanation that I've given you guys. Simple as fuck. Alright? So there's no need to explain much again. It's just simple logic. It's just structure. But this on 15-minute chart, anywhere structures is valid. Anywhere you can read structure. Both on 1 minute, both on 15 minutes, both on 5 minutes. I read the chart same way. How I read all other pairs, same way. It's just basically same thing. The principle doesn't change. Just that the market condition changes, but the principles remains the same. So I said, just pay attention and wait for the right opportunity, and you strike so hard.
I hope you guys understand my explanation. For real. See, the market is basically logical. It's common sense. All right. So for those of you, I'll say it again. If you are watching my video for the very first time, or if you are coming across this video, congratulations, you made it to the end of this video. Please like and subscribe to this channel. You can download the video and share to your friends, so that they can possibly share my link, so that they can come to my YouTube channel. Look, I am literally trying to tell you that trading is real. It's just consistency, trying to study, trying to repeat same thing, same logic that has worked, that you've tested, repeating it until you've mastered it and mastered yourself. Strategy is just 5 to 10%. If you can overcome yourself, the discipline aspect, the understanding your risk management, trying to wait without doing anything when the market is not presenting anything for you, that is a skills on its own. All right. So guys, please like and subscribe. Don't forget, it's your boy, Only One by FX. You know the vibes. We are still on the road of becoming or understanding, or should I say, figuring the world of financial market, or the world of trading. So guys, see you guys in the next one, or catch you guys in the next one. Yo!